All right. Good morning, everybody. Thank you for getting up bright and early. It's 6:30 a.m. on Wall Street, 3 hours before the cash open. It's time to get our global macro on. Let me get the site going. Welcome to QuantBox Live, where we uncover the best fundamental investment opportunities. The stock market indices, yep. Gold, oil, yep. Currencies, yep. Very cool. My name is Wayne McDonald. I'm the founder of QuantBox. I'm also a Harvard-educated economist. I love economics. And as an investor and as a trader over the last 20 years, I've always had a fascination for why money is moving. I don't want to chase candles on a chart. I love technical analysis. QuantBox does technical analysis, but there's so much more. I'm trying to figure out why the money is moving so that I have the strength and fortitude to let my winners run. So anyways, if you're watching this on YouTube, you're watching it many hours delayed. Why don't you swing by quantbox.co, take a 1-week trial for $8, look at all the pretty colors and get fascinated. Yes, we organize things. We organize them for our human minds to understand them better. You can do research and analysis. There's your commitment of traders report. Oh my God, euro dollar, fundamentals, sentiment, technical analysis, seasonality, our scorecard, the live price, the change, the targets. Oh my God, look at this 7-day projection. Cool. QuantBox.co, go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. I'm going to log in, and it'll probably block me. Nope, this one's going to work fine. I just want to show and remind some members, because I've had an email exchange with one subscriber. The data is not loading for them. Okay, that's not a QuantBox error. Just so you know, it's not a QuantBox error. If you've logged into QuantBox, then you're into QuantBox. So why does it block you if you get that message? And well, first of all, try using the Chrome browser. It just works better because it's a Google product. And QuantBox lives on the Google cloud. So they just play nice together. But the second thing is, and maybe many people don't know this, but your browser can be logged in to different internet sessions. So right now I have 1, 2, 3, 4 Gmail accounts besides the one I'm logged into. If I was logged into one of these other ones, well, that's not the one registered on the Google Cloud with QuantBox. So you will be blocked. So I think some people, they don't know that you can have multiple sessions. So you might be logged into your Hotcom account on Google Chrome. So all you have to do is switch it to the right one. So for example, wamcdonald@gmail.com is registered on the Google Cloud via QuantBox, you see? So make sure you're into the right session and you will be unblocked. So if you get the one where it says, this data is not found, it's because you're logged into the wrong session. It is that simple. Okay. Your Google is blocking you. Anyways, flip it. And if you don't know how to do it, go to YouTube. Okay. YouTube. All right, let's see. Did gold get fixed? I don't know if gold got fixed. I've been sending nasty grams every day, and they're like, it's fixed. No, it's not. So don't yell at me, please. I'm an only child and I'm very sensitive. Anyways, look at this. Awesome. Yields on the 10-year have been coming down. It was 4.3 and down. Is that right, Jim? Then I don't know what it is. By the way, I was speaking to everyone, not just necessarily you. You have to confer that, but like I looked, you're in correctly. Okay. Your account is registered. You're not blocked. Okay. Your account is active and you're logged in. So it's not that. It's I don't, that's the error. You're being rejected by Google. Maybe, I don't know. I hate saying things like this, but I don't know, clear your cache. I don't know. But everything's set properly. I'm not saying it's you, but it's you. And if it's not you, I'm sorry, but I don't see where things are set wrong. Sorry. So, anyways, look, going back to this, oil is up. You know, I had it at like 79 and then I got knocked out. Then I had it at 80 and a half and then I got knocked out. Now it's 82. Like, I've had some amazing trades on oil this week and benefit zero. So now oil's at 82. I should be up 300 on this, right? And I'm up zero. Damn you, oil. Volatility. Holy smokes. But what am I going to do? If I had, it's one of those things. If I had looser risk management, then I would be making money. But I don't want looser risk management. So, too bad. S&P 500 way up. We're at 45 again, up 1.45%. Yeah. Euro dollar flat. Bitcoin up 6% last night, now 5.55. That's cool. And obviously that had to do with the ETF news. Cool. And a slight risk on, just slight, not technically, but just, one tick that way. We can look at the gauges. Okay. And still the long term mixed. But remember, it was bearish, 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 and then it was bearish, bearish, mixed, and now it's bearish, mixed, mixed. But notice the mixed is turning slightly, ever so slightly bullish, which is definitely, definitely not bearish. Okay. Interesting. So maybe changing. So let's take a look here and do the scatter plot. Okay. It's hard to see. That's what 5.5 to 6% looks like. What do you think? A little bit of Bitcoin going on today? Look at this though, bullish and expected. So QuantBox has a score. Have you thought about this? You're like, how long ago did I add Bitcoin to the scatter plot? Anyone? Month and a half? I have a scorecard for it. I just haven't unlocked it. I've been too busy. So I guess now is a great time to do the world premiere on QuantBox. We have data and analysis for Bitcoin. We're tracking it in real time, obviously, if I can get these prices. So you guys happy now that we can do Bitcoin? I'm going to add it into the commodities section. I just haven't done it. You're welcome. But anyways, let's not go crypto. Let's remove crypto because that's an outlier. NASI way up, S&P 500 way up, Dow way up, oil way up. Remember, I started buying all of those last week. Pound up, CAD up, right? Pound yen, CAD yen, Swissy yen, USD yen. Looks like if there's a yen on it, it's up. I started buying all of those last week. Yeah. And expected, by the way. Remember, these are all, everything in the top right, QuantBox has suggested based on quantitative analysis of macroeconomic data that all these assets would be up, and they are up. Okay, so there you go. Everything down here is supposed to be down. These are the outliers where Dow has still got a negative score, but that's going to change really quickly, huh? So all of these assets are going to start moving over here. And that we know that from this seasonality. So let's organize our thoughts. Okay. QuantBox is thinking like seasonality, for example. It's thinking. So we have seasonality. But remember, it doesn't think ahead, it only does quantitative, right? So I have a feeling some of these negative ones are going to turn to zeros or plus ones on Friday. So you're going to get some moves here. And so some of these very bullish things like USD Kitty CAD, as a human, I'm thinking ahead going, okay, I understand what's going on here. And this might drop down from very bullish to bullish or even neutral if the dollar is expected to go weak. Why? Well, you can look at the seasonality here. Okay. Now, the interesting thing is this just happens to go up anyways. So there's some CAD weakness coming for some reason. Why? I don't know. I guess every day or every year is slightly different. Oops, that's not what I wanted. But nonetheless, we want to try to anticipate where where these are, like why are they here? And then in the future, do you expect them to drop or do you expect any of these bullish to go very bullish? Are you really, I think where the money is made is looking at everything neutral, in particular at the end of months or at the end of quarters. You should say, okay, these things are neutral now, but based on seasonality, where will they be in the new quarter or in the new month? And try to anticipate the moves and therefore kind of buy early. Okay. Or you find something neutral but seasonally bullish. You find something neutral, seasonally bullish. So again, like we just discovered that for some reason CAD weakens this time of year, and you can see Euro CAD is neutral, but you can see there's green on the screen. Maybe this turns bullish. Maybe this turns bullish. Maybe this turns bullish. Well, with that in mind, you already know I bought gold a week ago. I bought not Nasdaq, but the S&P 500 a week ago. Here's S&P 500. So it's still neutral quantitatively, but I'm bullish because I'm thinking ahead. And that's one way to use this tool. Okay. And of course, it works the other way as well. Okay. I also anticipate that like the yens will turn from -1 seasonally to +1 seasonally. Where do I get that information? Well, you can just pull up a scorecard, for example. Euro yen, we'll just pick one. Okay. That's neutral, but neutral now. But between the period of August and September, it tends to go up. Is it going up now? So that's what I'm telling you. This is why I prepare you for these things. Okay. From here to here, it looks like it usually goes up for a month or two or three or four. So you got to be ready before the turn. So technically, quantitatively, it's still neutral, but that -1 will probably turn +1 by the end of the week. And you could already be 2 weeks into the bullish rally because you anticipated the change. And that's what I did do. In fact, we discussed this in January that on the third week of August, and I would call the 23rd of August, the third week, Up, 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 up. Okay. So that's how we think ahead. Cool. We have some news today. Look at the 30-year mortgage rate, huh? Look at that. 7.31, and I'm sure that's not jumbo. Wow. That's crazy, right? But you're like, "Wait, that's way better than credit card debt at 20." What is it now? Probably 21, 22. How many people do you think in the world, when they lease a car, calculate the interest rate they're paying? Yeah, one. And what's their decision? Don't lease it. Because most people, what do? They say, "How much is it per month?" Um, $558. "How much do I have to put down?" 5,000. "Okay, I got that." "Sweet. Thank you for your 14% interest." "Huh?" "Thank you for your 14% interest on this car loan." "Oh, no, we didn't call it a car loan, we call it a lease." Do you know the sneaky thing about that, I think, in America? If you borrow the money, AKA car loan, there's a piece of paper you're given, and it shows you by law exactly the interest rate you're paying. But if you lease it, they don't tell you. You're renting this car, and you have to give the car back. And there's a cost, right? And if you reverse engineered the whole thing, you're paying 14% is the guess. I think I read somewhere that that's the average. Oh my God, right? That's practically a credit card with a what, $50,000 debt paying 14%. You're like, oh my God. Oh God. Anyways, guaranteed poverty. All right, let's move on. European inflation. All right. Okay. That comes out in a bit. We'll see, right? We'll see if it's below 6. Now, for us today in United States of America, what we care about most is another dumb prediction by a company called ADP. All right, so who knows? I always question why these numbers are so volatile. If ADP just adds up the paycheck stubs, are they those numbers vary that much? I don't know what they're doing. But anyways, this is small and medium-sized businesses that hire ADP as a payroll company to handle paycheck distribution, but also benefits administration. And that's very expensive. So if you're a small company with, let's say, less than 100 people, you don't want to have a HR department. How much money does your HR department make for you? None. Okay. So you rent your HR department from ADP. Cool. So that gives you a look. And so have they added jobs? Yeah, probably. How many? And if it's less than 200, probably another rally, because that suggests the Fed can stop raising interest rates. Cool. Balance of trade. The bigger the negative number, the better. It shows that Americans are rich. Okay. And you're like, well, why is that good? I mean, again, if we are paying foreigners to work for us. We're doing it because it's cheaper. So maybe as an example, if you don't have a lot of money, but you want to live rich, move to Cuba. You know how much a hamburger is in Cuba? 80 cents. Oh my God, that's $5 in the United States. Yeah. So you're going to be 500% richer. Well, this is in a different way. You're hiring people to work for you on the other side of the planet. So you're buying stuff from them instead of having an American factory. There's a factory in Vietnam making shoes for you. So that makes your shoes cheaper. Or you can have nicer shoes that you can afford. So, anyways, so the bigger the negative number, the better it is for us. Okay. There was a time, maybe your grandpa's grandpa, but there was a time when clothes and shoes were so expensive that you kept them for decades. You didn't buy new shoes, you repaired your shoes. And by the way, your $100 Nikes, that's nothing to compare to what it would have cost you back in the day. Your shoes would have cost you $1,000 and you took care of them. They were precious. And then you would repair them when they wore them out. And then your kids would inherit your shoes. They were passed down through generations, right? But thanks to globalization, now things like your couch is disposable, right? What? Every 7 years you get rid of your couch. You just, I'll get a new couch. They're all disposable. So, anyways, thank you, globalization. Yeah. Does anybody have like someone in their family that has plastic on their couch? There was a time when that was fairly normal. And for Canadians, sorry, Chesterfield. Yeah. Yeah, that's what I'm talking about. Oh, oh, now I know what he's talking about. All right. Yeah. Yeah, if you said Chesterfield to an American, their minds explode. Ask an American if they have a carburetor. Blink, blink, like Ren and Stimpy. Blink, blink. All right. Yeah. All right. So, anyways, we negative is good. By the way, what does this actually mean to us as currency traders? If you're a foreign exchange trader, what does this mean? We're importing stuff like Nike shoes. Bigger the number, the better. It was 87. So we're hoping for a bigger number, a significantly bigger number. We're importing shoes and exporting the US dollar. We're buying shoes and selling USD. You have to think about that. It's a currency pair. Okay. I'll make a point like this. How about this? It's Nike USD and you're buying. So this asset goes up. You're long shoes, you're short the dollar. That's what this is. And that's risk on. Okay. Yeah. Okay. We have some GDP coming out. Okay. I didn't mention this on Sunday/Monday because it's so backward looking. I don't really care as far as trading is concerned. As fundamental analysis, obviously, I care about productivity the most. Okay. Corporate profits down. That would be slowing economy, put pressure on the stock market. Okay. Prices normalizing. Cool. Okay. Home sales. Okay. And then later on, EIA come out. Hmm. The rest is later. So the big one today is ADP. The real estate stuff is important, but I think we already know it. GDP is important, but I think we also know it. But but right now we want to look at like ADP is going to overshadow things. Where is it? I just had it. How come I can't see ADP? Uh, there it is. ADP is important, and if this comes out like 387,000, my position is going to be threatened. If it comes out 200 or less, it's going to benefit me. And this will have to do with the assumption of the Fed's move at the end of September. Right now, the narrative is back to mission achieved, mission accomplished, no more Fed hikes, no more, none. So we're pricing out the next rate hike, which is I predicted to be in November, many months ago. So, so we'll see if that gets priced out. If it gets priced out, it's risk on. So we're tracking inflation, right? Here's a tool I released to the pro subscribers. There's inflation going back to World War One, which is cool. Again, I got a flex. My watch is from 1918, I think. It's hard to tell by the serial number, but about that age. Saved it. I saved it. Anyways, going back to then, too much probably. We can go back to here. Okay, year 2000 to 2023, you can see globally inflation is getting back to normal. We're getting there. We've made some pretty decent improvements. So, what you want to do is kind of say, well, what's normal for global inflation? What's normal? Six is probably too high, but let's do five. And then, of course, negative is probably not desirable, but we will record the zone, if you will. So that would be somewhere inside of that would be normal. Even you could have normal high and normal low, but normal is normal. Okay. Now, of course, the math for that is you could figure out the mean, right? And then the deviation, and you can do slightly, you can create that zone. But humans are good with patterns. We can just easily do it with our eyes and not have to do the math. But nonetheless, so some of these things are normalizing. Okay. European inflation is still too high. So Germany is still too high. Euro, right? Eurozone, too high. Okay. That's these two. There's a red one in here. Which one is this one? That one's too high. New Zealand. Is that right? New Zealand's still that high? Yeah, New Zealand and Australia is still too high. Right. Look at pound. It's just quite an outlier. The UK is quite an outlier. Okay. So we want to see these things coming down, for example. How about this? This is a way to organize your GDP. So since GDP is coming out, why don't we look, see where the world is at? So today's GDP. By the way, this is pretty, right? Isn't this pretty? This is on QuantBox Pro. This is GDP quarter over quarter going to 1960. You're welcome. So, anyways, we'll see where we're at here if this pops back up. Okay, because we're going to get an update today. And what's normal to something, right? What would you say? Is that about normal? Okay. Now, the trick here is, the Fed's trying to slow the economy down. So if it pops back up to 5, then maybe the Fed has to raise interest rates. And we price that back in, that's risk off. So today is kind of hard to, it could have a negative impact. Or we can say, because GDP growth isn't actually what the Fed is targeting, right? So it'd be cool. The Goldilocks scenario is where GDP is going up and inflation is falling. That's all we care about. And that number comes out, what day is it today? Wednesday. So tomorrow's Thursday. That's PCE. So, but today the surprise is, and by the way, the Atlanta Fed says it's going to be a hot number. I think they said 5.25 or something. That could hurt us on the short run, and then be good by the end of the week, because the Goldilocks scenario is GDP growth and falling inflation. Like, we fix the inflation problem without a recession, and that's the narrative today. But I don't know. It could get weird. Get weird. So ideally, this just comes out like 3 something. Let's say the Atlanta Fed is correct and it comes out stronger than average, but not ridiculous. That'd be ideal. Okay. So yeah, so if this one comes out 2.4, 2.5, 3.0, I think would be all fine. And therefore, the narrative today would be the same narrative of risk on. Now, also ADP is today, so that needs to come out 200,000 or less. And that would be bad news, which would be good news. The bad news is less people or it's harder to find a job. But the good news is inflation and in particular, wages are going to fall, which lowers inflation, which means the Fed doesn't have to raise interest rates anymore because it's already working, and the lagging effects are going to take hold. Nice. And then, once we get through this year, once we get back, I think as soon as we hit January, we're all going to be worried about a recession. We just averted it this time around. We can look at the UK, or can we? No, I guess is one of these UK and one of these, I guess, yeah, double entry. Huh? Let's see if it gives you the same data. Or if it, yeah, just don't work. Yeah, it just don't work. I think this is supposed to be the UK. Oh no, there's the UK. UK, we know they have very high inflation still. Wow, look how low that got. That's crazy, huh? And it looks like the same as the United States. Well, the pattern is the same, but the absolute numbers. The integers are different. So the UK is at, don't call it negative. I always laugh like there's some government agency, huh? And they've done all their math. Are they really that good with their math to know the difference between 0 and 0.2? Or do you think the boss came in? We aren't, no negative numbers today. Well, boss, it's like negative zero point 0.8. Hell no. Do your math again. It's not, right? It's not below 0. Round up, son. Round up. So they go back and round everything up. You're like, oh, you're right. You're right. It's not negative. If you round everything up and add a couple of things here and there, yeah, you're right. It's not below 0. I mean, it's just ridiculous that they have that kind of accuracy. Look at this. It was 7.52. Bullshit. Anyways, right? Yeah. Everyone says, oh, you can't trust China because they lie. Or like, they can't, there's no way there's that kind of accuracy on any of this stuff. But, anyways, they should just come out like 7-ish. Huh? 0. It looks about like 0-ish. That would be right. That would be better. But, anyways, yeah. Imagine that plunges back down into negative territory. So if you want to go back into history, like, okay, this is the global financial crisis, right? GFC. This is COVID. What's going on here when the UK went negative? What's going on here when the UK went negative? What's going on here when the UK went negative? You have this historic data now. If you wanted to be astute, you would go do research. What happened? And what was the impact of the pound? And if the UK goes negative GDP again, what happened to the pound here, 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 and here? So that maybe, imagine if the pound always fell every time. What would you do? Buy the pound? So get in on it, right? Come on, you got all this access, QuantBox Pro subscribers. You have all this data now. Huh? Use it. Of course, we can look at employment down the road because we have NFP later this week. Cool. All right. So is that enough? I guess we need to do some technical analysis. Wayne, you can't leave. You have to do some technical analysis. All right. Well, let's look at a chart. This is me watching the USD. Some weakness. Earlier in the month, I thought it would go higher before falling, which just shows you already in the middle of the month it kind of wimped out, which is exactly what we want, the turning point. Yen's still quite weak. Swissy actually gaining back a bit, but we've been at this zone now for like a week. I wonder if this drops, and this drops. All of that would be risk on across the board. Okay. Euro doing really well, which I would expect if dollar weakens. Pound just creeping up still making higher highs and higher lows. Aussie had a nice little rally. Maybe it's over now. Maybe, we don't know, or it's a change in direction, but we're definitely at a resistance zone, definitely in something that looks generally bearish. I don't like to bet against trends. I do, or I did own Aussie. It's probably gone now because It was fleeting strength, but euro is likely to stay with us. Okay, Canadian dollar. Yeah, I'm trying, but remember when we look at the seasonality, at least versus the dollar, even when the US dollar is weak, for some reason the Canadian dollar gets weak. All right, so I don't know. Too bad, so sad. We can look at some commodities quickly. Okay, here's the S&P 500. I'll drop into like an hourly chart. Yeah, it did all right yesterday, so I'm still long, 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 long. And this is the weekly target. So if this was a swing trade, okay, if this was a swing trade, meaning you're in for the week, the way that you look at it is this is the best weekly buying price you can ask for as a bear. Sorry, as a bull. That's the best one. And that's taught in the training courses at investorbootcamp.com. And based on that entry, this is the projected high for the week. So you knew that last week, even on Friday of last week. So that's a basic swing trade, and that's why I'm long right here. Cool. So if it was a swing trade, I would exit here for profit. And actually being done around Wednesday, Thursday, that's actually pretty normal for a swing trade. That's right as rain. Done. That's perfect, by the way, for those of you that don't want to day trade or intraday trade or scalp. If this is a side hustle for you and you're doing it for fun or for income, you should treat it more like investing than trading. And this is a short-term investment where you expect to be in it for 3 to 5 days. Now, for institutional investors, that is a scalp, right? Being in a trade for only 3 or 4 days, so like, what the hell? But anyways, that's a strategy that you should probably employ. Uh, Using QuantBox, you might be able to stick with this for 2 or 3 months, not 2 or 3 days or 2 or 3 weeks. And so, like, the bigger trade is in it for a couple of weeks. Okay. Not a couple of days. So there's a nice little swing trade. But the the bigger trade would look kind of like this and eventually here. In QuantBox, you'd have to look at it and say, well, what does seasonality tell you? How long, if it turns bullish, how long does it tend to stay bullish? Because the strength of QuantBox is if you knew the past, we know it doesn't predict the future, but we know there are patterns. And over the last 5 years and over the last 20 years, if it usually lasted 3 months, would you have the strength to try to let your winners run? Not for 2 days or 2 weeks, but how about 2 months? For a lot of traders, that's impossibly long. That amount of time period. But if you thought about it as an investor, 2 months is nothing. Okay. I own stock I intend to own for 2 decades. So you gotta like enter your trades like a trader. Okay. So you might be on a 15-minute chart trying to grab a double bottom. By the way, this is the expected low for the month. So why not buy a double bottom if you were a bull? And then the trader in you gets the best price it possibly can, the trader, because they're on a small time frame. But then the next thing is if you have quantitative analysis of flows, maybe, maybe you could be in this 2 or 3 months if that's what it says. Okay. Maybe. But that would be the strength of QuantBox is giving you the courage to let your winners run and not profit too early. Because once I've entered this trade, the work is actually done, isn't it? Well, I've been in it for 2 days, made some money. Yippee for me. But it it's possible. I want you to think about this. Possible. I don't know about plausible, but it's possible I could be in this trade for 5 years and it doesn't take any more work. But you'd have to have a bigger outlook than for today, right? Or for this week. So like this was a day trade. This was a day trade. Okay. This is today's day trade. Here's tomorrow's day trade. So I could make those decisions every single day, buy dips, or I could buy the dip and hold, or I can buy every single one of these and hold until you get to the weekly target and then you take profit on all of them. Or you just keep buying all dips, moving stops break even. Okay. So you buy here, you buy here, you buy here, you buy here. Okay. You buy here, but you lose the two next to me. And then it goes back up. And then you buy here and you get one of those back. So you lose this one, you lose this one, you regain this one, and this one's still open, and this one's still open. And the thing is, now you have a bias because you're trading the double bottom. You add, give back, add, give back, add, and all of a sudden, 3 months later, you have 15 trades. Anyways, there's all different ways to skin this rabbit. Cool. So, anyways, that's the S&P, and that's a guide right now for risk on. So, we could have a risk off today, but it really depends on the news and gold just doing its thing. No big deal. You can see I have an arrow here from previous analysis. Cool. Now we're up to the next level. Now I feel naked without having monthly pivots on here. Monthly pivots show targets. But what if I don't have a target? Okay. So, anyways, you see, I have longer term and shorter term analysis. Both are showing bullishness. Okay. We're riding the moving averages, which shows bullishness. Oh, and I forgot to tell you, look at me. I have so much stuff going on. I forget to tell you all the stuff I've been doing. So yeah, so anyways, I have all these tools on QuantBox I haven't released. But I'm doing gold here and I'm talking to you and I'm talking to myself and then I realized someone else is talking to me. Somebody named Aiden. Aiden at tradeplans.ai. I asked him, I said, "What do you think about my trade plan on gold?" And Aiden says, "Well, let me take a look. What's your plan?" Oh, gold and silver, baby. We got some gold and silver, and it works. I got my analysis, right? It was really good. I'm like, it's so funny. Like, I'm becoming proud of Aiden, like a father, like a parent. So Aiden sent me. I posted a trade plan yesterday, and he sent me the feedback. It's a 7 paragraph email and 3 different charts explaining what he thinks about gold, and I'm like, good job, Aiden. Good job. I'm so proud of you. Yeah. Okay. Yeah, Andrew says he's got multiple Google accounts, yeah, and me too. So almost every day when I log into QuantBox, um, I have to switch. So, anyways, so there's still a conversation about a subscriber having trouble getting in. Where's my? Do I even have QuantBox open? Let me just. This is good because it happens to people. Um, okay, first of all, this shows I'm logged into QuantBox. Doesn't tell me if I'm logged into the browser properly. And then you want to check here, and you can see there are many different versions. Okay, so now if I go to QuantBox, I don't think it'll work. QuantBox.co. See, I'm not even logged in. So now I log in. It doesn't remember. It doesn't even remember my login details. And do I even know mine? What's the name of this account? I guess QuantBox.co. Okay, I think I know this one. All right. Don't look. All right, so we'll try if I can remember. Cool. No, 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 I don't care about this. So now I'm logged into QuantBox. Okay, so I'm logged into QuantBox, but okay, in a different profile. And this probably won't work. Boom, can't access the report. Not QuantBox, you see? This is not QuantBox if you get something like this. Your account doesn't exist on the Google Cloud. That's what this is Google Cloud telling you. And look, Google LLC. It's not QuantBox. I'm logged into QuantBox just fine. So I'm using the wrong browser profile. I have to switch to the one. So now I go to this one. Let's say I know that one is registered. Oh, okay. Now I'm back here. Okay. I log in. I'm back in, but now I'm in this profile. You can see the picture is different. Go to QuantBox Pro, and now it will log me in. JP says he gets into everything except QuantBox. Yes. So you're logged into QuantBox, but you're being rejected by the Google Cloud. So and I've checked. I believe I've checked it, but I'll check again. Send me a screenshot of this. Send me a screenshot of this and show me what browser profile you're logged into. And remember, I have multiple profiles. I actually have like 15 different Gmail accounts, right? So it's constant for me to be rejected by Google. And I have to, because what you're doing when you pull up these reports, you're actually logging into the Google Cloud. So if I haven't given you permission on your, like, you have to have a Gmail, and then I tell the Google Cloud, allow Jim onto the Google Cloud using Jim's Gmail address. I put it there and it unlocks it for you. So if you log in with Hotmail, no, you're rejected. If you log in with a different Gmail, you're rejected. If you log in with no profile and you're in incognito, you're rejected. Okay. Now, some people will also have ad blockers and stuff. Well, you're blocking Google Cloud. So it could be stuff like that. Your antivirus might be blocking the cloud. Your anti advertising software could be blocking the cloud. So it's either Google blocking you or you blocking Google. But send it again to me. Send me the screenshot and I will log in again and I will check all those settings for you. Okay. You only have one Google account? Cool, but you might be logged into something else. Okay. So, anyways, I will look for you. All right. So, anyways, we did gold, we did oil. Maybe we should do one yen pair, and then we'll call it a day. So one of my long shots here is this Aussie yen, and it's still climbing north. It's made a higher high. Typically, I don't move my stop unless it makes a higher low and then a new higher high. But this is on a daily chart. If we go into like a 1 hour, it's climbed well, huh? Check this out. Okay, there's my long. And up, down, there's the next one. Okay, up, that's a new higher high. So there might be in the future, somewhere around here, a low and a high. So I'm watching these. Um, okay, like for example, I could move my stop now. Okay, because we've made the higher low and now we've made a new higher high. So I could move my stop to break even on this time frame because the assumption is it's going to come down, make a new higher low and a new higher high. But if it collapses, that's not a retracement, that's a potential reversal, right? So how do I feel about that as a bull? Hate it. So I can do that. Sweet. But of course, I could have already dropped a limit order to get into a new one, right? For example, when you have a higher high here, here's a little trading technique hack for you. Trader's hack. You get a higher high, you go over here and you go buy limit, ciao. Now, it wouldn't have hit, it would have got close. Remember, it's not a perfect entry, it's a guess, it's a guideline, but you could do it if you had no other means. Now, if you're going to do something like that, like, okay, again, you're higher high. So if you're here, you say higher low. So you throw a limit, but then you need to make sure you have your OCO running. So you grab your auto stop and you say, hey, if that limit is hit, throw down a stop of 33 pips. You can change that, of course. Oops. Okay, you can make this whatever you want. Okay, now you have a stop loss of 55 pips. Take profit order of 333, and you go, boom. Now you got a happy face here, which means it's working. You're not working, it's working. And what you just told your trading account is A, you're a bull, and B, let's clear this out. Remember, you would have done this up in this zone. So you're saying, okay, account, it comes down here. I want you to buy it. I want you to put a stop here, and I want you to put a limit way above where I can't even see. And your expectation is this. Cool. Another way of doing it, and of course, is like you didn't get hit, you got close on that situation. But now you could just recycle this whole thing if you wanted to and say, well, that's what I want to happen later today. Now it's still a working order. And your OCO is you still got a 55 pip stop. It's not in the market because you haven't hit. This is a working order. So if this gets triggered because we have a pullback at 94.50, then you will be put into the market, literally a market order. It goes from a working order to a market order. And then next tick, which could be 1 second later, it'll throw a stop 55 pips below your entry. and it'll put a limit order, a take profit order, 333 pips above. So I like to do that while I sleep. And then very often I wake up in the morning and I have a trade slightly loser or slightly winner and nowhere near my profit target. And it might be ridiculously high. So I can move my target. I can move it to 222 or hell, I can move it to 111. Whatever makes sense. Move it to the M4, weekly M4, monthly M4, whatever. You can adjust it. It's cool. It doesn't matter. And you can adjust your stop. I don't recommend it because I'd rather you have like some rationale. Is it a day trade or is it a swing trade or is it a position trade? That would dictate your stop. You might want to do a 111 stop, 333 limit. A 3-to-1. You should always have a 3-to-1. If you're risking 50 pips to make 25, okay, you're a walking investment zombie. Okay. Coolio, right? Yeah, seriously. I'll leave you with this logic. If every trade you had 3 times more potential than the risk you're taking, then you can lose 66% of your trades and not lose money. Huh? Let me say that again. If you have a 3-to-1, which means your trades are actually worth taking. Okay. If they're not worth 3-to-1, then your trades are worth less, maybe worthless. So you're assuming more risk than reward. You're bankrupt, just not today. You'll end up bankrupt unless 66% of your trades are winners. Okay, well, you're like, but Wayne, 66% of my trades are winners. I'm a really good trader. Good for you. I bet you're not making very many pips. So the only way you can make any serious money to pay the rent is that you're taking large lot sizes. Great. And I bet you anything your losers are bigger than your winners and you will end up bankrupt. So I'd reverse the whole logic. Instead of jacking up your lot size, why don't you jack up the value of the opportunities you're taking? So again, 66% of your trades could be losers, full on losers. I'm not even counting break evens. 66% of your trades are straight up losers, and you would still not lose money because your winners are worth it. So what if you were what if you were 50-50? Or what if 33% of your trades were losers, 33% of your trades are break evens, and 33% are winners? You're very profitable. You're on your way to a career because your trades are worth it. And if they're not worth it, they're worthless. So, anyways, can I get off my soapbox now? Wayne for president. All right, cool. So I'll see you later. I'm sure. Peace on earth. May the pips be with you. May your profits be above average. Go get them, but play safe. Cheers.